Everybody, it's Pete. Good morning. Welcome to today's episode of Stocks for Breakfast. It is Friday, May 29th, 2020. Today we're going to talk about something that might be a little controversial, but it absolutely will lead to consistency. That's really the biggest thing. But consistency comes from having conviction in your ideas, a deep feeling of certainty that something is going to happen. And that's really why we trade, right? We believe that something is going to move in a particular direction, whether it's up or down, most of us to the upside, right? But where does that conviction come from? So we're going to talk about two things today that I think are at the core of why most smart, hardworking traders struggle. And I see this a lot in the private community. And the first one is patience. Patience to wait for good ideas. And just wanting to be involved or getting involved right away or getting into the program right away and immediately feeling, I don't want to read all that crap. I just want you to tell me what to do right now. You can't accelerate experience without actually trading, without actually seeing different market conditions, without actually getting involved in the market, so that's kind of where I want to get to, where I think is kind of the controversial part, which is you need to be patient in your setups, but you need to be very aggressive and trade a lot when your setup is there. So in other words, you can't hesitate when you have a great trade. The problem that I see with a lot of traders is not anticipating where and when they want to get into a stock. And then when it happens, they wait for too much confirmation. Then as soon as you get in the trade, it moves against you. You're like, oh my gosh, I'm the only person who makes these bad entries. As soon as I get in, it's a losing trade. There's two reasons for that. Number one is you need a better system for identifying what a great trade looks like. Obviously, I call that order flow. And also a part of that is tape reading. Now, actually, we just had somebody new join the community yesterday and basically say, I didn't sign up for the beginner stuff. I want to learn how to read the tape. Well, tape reading is the foundation of everything that we do. Tape reading is the beginner stuff, because if you don't have a solid foundation in what you're looking at, then you're just going to be placing trades for the sake of placing trades because you want to make money, as opposed to placing trades because there's money sitting in the corner. So we have this perfect paradox of you need to be patient to wait for good trades. You need to be aggressive to trade often when you find good trades. But then the last part is, I'm going to say this very carefully, it's your winning trades that are killing your P&L if you're not making money, if you got the first two parts right. So if you find you have patience, or you learn patience, and again, patience can only come from having a structure of looking at the market, and we're going to take a look at charts in a second, meaning that you should be able to look at a market and, believe it or not, more often than not, you should be able to say nothing's going on in whatever the time frame that you're looking at. Now, I know people on television will say there's always something going on, and honestly, that's bullshit. There isn't always something going on. And the SPY, for example, the SPY ETF was going sideways for about 6 weeks, and anybody who was trading E-mini futures or even trading the SPY or the Dow, which was sideways for a long time, there wasn't something going on. It was very challenging to find what we call A-plus ideas, challenging to find great ideas that we expected follow through. If you watch yesterday's video, we talked about trade expectation. So you should get excited at some point in your trading career, and I'll call it a career. If you're watching this right now, you want to turn this into a skill that you own for your life, and you could take money out of the markets at any point. The first part is being able to have a structure to look at price action and say, that's interesting. I think there's something going on there. And now it's just a question of me saying, when do I get involved? And obviously, Jesse Livermore talks about that in Reminiscences of a Stock Operator, where he says the line of least resistance is obvious, and then he looks for a spot to trade in that direction. But then the second part is flawlessly taking every single trade. Now, there's a balance between, and I want you to take what I'm saying right now within context, don't take it out of context, is that you will actually become a better trader. First, again, I want to harp on this. If you understand how to read the tape, understand how to read order flow, and only execute trades that have good probability to follow through, have acceptable risk and profit potential. I know that sounds obvious, but you would be amazed if you went through your P&L and looked at how many trades that you took that were in the middle of nowhere where if you were giving yourself advice looking back on those trades, but what was I doing? There was nothing, there was literally nothing going on. So again, getting to that point, but here's the controversial part. The controversial part, which sounds controversial, but it's really not, is I would challenge you, and again, without ever met you, have no idea how much buying power you have, capital you have in your account. I would challenge you that once you understand order flow, once you understand how to read the tape, and you set up high probability trades that have a high expectation to actually earn money, right? I would challenge you to trade nothing but 100 shares in every single one of the trades that matter, and take every single one of them. So that might mean that sometimes you're actually in 3, 4, 5 trades at the same time, but only with 100 shares. What we're trying to do is build the muscle, build the habit, build flawless execution of good ideas. And here's the key. You're letting your probabilities, you're letting your edge, which in my case is order flow, you're letting the edge do the hard work after you did the hard work of finding good ideas. Here's the problem that a lot of traders have. They'll look at their trades and they'll go into the day and say, okay, I got 4 ideas, as an example, 4 ideas for today, 4 ideas that I want to swing trade this week, 4 ideas that I want to hold for the next month, right? And then they'll pick one of them. All 4 of them are good. All 4 of them meet the criteria. All 4 of them give them entry signals, but they pick one. That is completely wrong. I can't say this enough, and I'm going to say this in a way that I'll probably be misquoted, but I'm going to say it anyway. You have to trade more to make more when you find good ideas. You have to take every single trade. So you're speeding up, allowing your edge to do the work. If you think about what an edge is, if you think about what a strategy is, and specifically we'll stay with the term edge, it basically means that over time, there's a greater likelihood of something happening. And when I say over time, I'm not talking about time, I mean sample size. Over a large sample of perfect trades, if you do what you're supposed to do, the edge, the probabilities actually do the hard work. And it's not flipping a coin, it's you're stacking the odds in your favor that every single time you take it, you're getting to 10, you're getting to 20, you're getting to 30 perfect trades. And that does the work, assuming your trades have enough room to go. Excuse me, that's the terminology we use as well, has profit potential, has not traveled too far too recently, so to the point where you're going to be the last person getting involved. For example, like we had in stocks yesterday, Goldman Sachs and JP Morgan, we said we liked the financials, but not all of them, because a few of them actually had rocket days where they had 2 bullish gaps, closed on the highs, and then traded into resistance. So that's an example of you like the idea, but it's the wrong time. So again, that plays into the patience. There's patience to wait for good ideas, patience to wait for the right time, and then there's patience to hold those trades long enough where you're supposed to make the most money on the trades where you reeled them in, you got them on the hook. Then you have to learn that last skill, which is holding those good trades. So I can't emphasize enough waiting for good opportunities, but then be aggressive when you get them and take every single trade. That is kind of like the hidden key to awesome, profitable trading, and more specifically to consistently profitable trading, because money comes from you. It doesn't come from the market. It doesn't come from the market getting all the stimulus package. Because look, the bottom line is the market keeps going up, and a lot of active traders are not making money because they're not aware of how to do what we're talking about now. So it comes from you being patient and then being super aggressive when you get the trade. So I'm going to challenge you right now. And again, I don't care how much money you have in your account. If you're not making money right now, if you're not pulling money out of the market on a consistent monthly basis, it doesn't matter how much money you have in your account right now, because something is wrong. Something is not happening that you want to happen, which is to see your account grow at a blazing fast rate, which is very possible if you follow the principles that we're talking about right now. So again, to recap, patience to wait for great ideas, which means first you need to understand great ideas, which again, in my world, that's order flow. Number 2 is aggressive action when those trades unfold. You put the trade on, you put the trade on, you put the trade on. And then the last part is you go back to patience again, which is not fully understanding you need to hold your winners in order to pay for all those small losses and small wins that kind of wash each other out, which means that you really need to learn how to build an argument for a good idea and when and how long to hold those trades. So I'll give you a very quick example. We'll go to the charts, and we're going to take a look at, wow, that light is bright. we're going to take a look at a stock that I've been talking about quite a bit the last couple of weeks. And interestingly, this stock actually, you know what, I'm actually going to zoom this out so you can see where the resistance was. So you can see Penn got up to this resistance level a few times, briefly got through it here. But during this period here on the weekly charts, we went from an inside candlestick to well bid, and now we just started closing above the open on the weekly charts with consistency, and it got on the radar, and it was a stock we were aggressively trading to the long side. You can see it finally cleared the level here, and this is another important thing too, is seeing the differences. You need to see the full context of your chart. Sometimes you can't tell just on one time frame, which is easily one of the biggest problems that day traders have, is they're only looking at one time frame. So my point was, we were talking about being long this stock. We were long the stock, but then we said the profit potential up into this area was significantly diminished. And just to give you an example of what happened yesterday, the stock got absolutely clobbered when it hit the significant level. So getting up to a, this highlights the point of being in the right stocks, having the patience to wait for them to give you better ideas, which right here at the $19 level, and then knowing when and how to be aggressive with how long you hold the trades, and then obviously not being that last person up at the top of the buy or sell situation where you're kind of like holding the bag, where it's you need more confirmation, and you finally pull the trigger and get in the trade. And then you're the last person buying because you didn't recognize the fact that the stock was what I call at a saturation point, on top of the fact that the stock actually was at a significant resistance level. Pandemic or not, it's having a hard time getting through that level throughout the history of the stock. So you got to pay attention to what's going on, right? So again, you need to you can't be patient, first of all. You can't be patient if you don't know what a great trade looks like. In my world, that means you need to build an A+ trade, and everything that's not your A+ trade, you have to lower your conviction level, right? But you should strive, especially in the beginning. I take it back. You should strive all the time only to take A+ trades. And then when you see them, take the trade, and then learn with your real trading, with trade after trade after trade, perfect trade after perfect trade after perfect trade. Now you need to write notes. Now you need to say, okay, I got out of my trade too soon. Why? Why? Because I was up $750 in 2 days and I liked the profit. That's a horrible reason to get out of the trade. You want to get out of the trade because it's not working anymore, not because you just like the P&L, or even worse, because you lost money yesterday and you want to make it back today, so now you're scared and you want to just get back to even. Horrible reasons. Every trade is an individual trade, but ironically, within the context of all of those trades, they're a part of the sample size that ultimately will make you a profitable trader if you're setting these things up. So again, if you're struggling right now, that means one big thing. First and foremost, I'm willing to bet you don't have a system, you don't have a process in place where you can look at a chart and say nothing's going on. Or there's definitely something going on, there's room to go, now I just need to find a spot to get in. Or absolutely obvious, but not the greatest time for me to get in, I need to see a pause. And if you go to yesterday's best stock picks video, there were quite a few of them, and over the last week and a half, where stocks were setting up, but I said set alerts because they were becoming obvious situations, but it wasn't the right time, or they traveled too far, and then they had to pull back or pause. You know, here we say often push and a pause before we ultimately get involved. So that's the big thing to head into this weekend. We're heading into Friday again, full day of trading ahead of us. But as the weekend unfolds, if you really have this hunger and desire to be a profitable trader, really dig in and say, can I look at it? Look at your own trades. That's the single biggest thing. Look at how many trades did you take this week and month? It's the end of May, right? How many trades did you take this month where you could say, you know what, if I had to do that again, I probably wouldn't. And that's, you know, getting away from those trades, you start to immediately consolidate what you believe is a good idea, only get involved in good ideas, execute those ideas flawlessly, don't hesitate, take it. And then the next part of the habit development is actually learning how to manage those winning trades, because I'm telling you, write this down, it's your winning trades that are killing your P&L, because you haven't understood how to turn a $500 trade into a $3,000 trade, because you're turning a $3,000 trade into a $500 trade, because you don't have the conviction in your ideas, which again, in my world, that means order flow and recognizing order flow, and then doing the tape reading that tells you which stocks at the right time and ultimately how long to hold them. So I'm sure you know how to read charts, but there's a difference between chart reading and tape reading. And that last piece is building that argument. And you need some screen time. You need to trade, and you need to keep a good personal journal of what you're doing right and what you're doing wrong. Because if you don't use the market as a giant feedback loop, you're never going to learn from your own experience. And I say it all the time. The most valuable trading book you'll ever read is your own journal. And if you're not keeping a journal, number one, and if you're not keeping a journal that absolutely says, here's what I did and why, and how could I improve that, you're wasting a lot of valuable time and money by learning from your own experience. If you want to accelerate that, you can join me in the community. I'd love to have you. But for now, if you like these videos, absolutely click down and subscribe. That would mean everything to me. And again, if you have any comments, absolutely that in the comments as well. Any feedback, and we will then cover that in a future video. So have a great day, everybody, and have a safe weekend.